friends, I'm back with one more video. So let's discuss today about all the potential trades for October 20th expiry with chart analysis. So this is for the 20th expiry. So let's give it a try by deploying all this directional and non-directional. Okay, so you have all this a combination of Straddle, J Desired, Strangle, Siren Fly, Calendar. Okay, so let me take you to Sensible. So before that, we need to have the view of the market. So before we go for any trades, we need to have the view of the market. So how do I do the price action? I mean, how to get the view of the market, I'll show you. Okay, so this is my view. So basically what I'll do is like I'll take in 1 hour time frame, because whenever I go for index, I basically go for 1 day and then I'll come to 1 hour and then I'll go to 15 minutes. But now let me show you quickly on 1 hour. So this is my trend line row. So there's a resistance 1, almost resistance 2, and this resistance got broken, so it went up. So maybe if I take this price action right from this to my, if this has to act as a support, so then 10% is what the market has to come down. So what I'll do for now, this will become say I'll not have this thing now. Okay, so because 10% is huge, first I have to think about 3%, 4%, 5%, and then I have to think about the 10%. Okay, let it be. If you want, I can just keep it. But now how should I do the price action? Okay, so maybe what I'll try to do, so let me try to connect this and see, because I need to form a view of the market, right? So is it valid? Okay, so I have one support and then two support. So this is making high and then higher high. So maybe I'm expecting it can come down here and then it can go up. It can take a support, it can go up. Okay, so if I drag this trend line right, this looks kiddish for everyone, but at times it works like a magic for me, honestly. So if I drag this, okay, see, right, so the same thing acted as a resistance here, the same thing acted as a support, it broke, and then see consolidations, again it acted as a support, and then maybe, so I have this trend line. Okay, so what is the gap it has? Okay, so maybe 4%, right? So now I have to have the resistance. So I got this support. Okay, 4%. We all know, right? Bank Nifty can make on an average, it can make 3 to 6% or 2 to 7% per week. Okay, 2 to 6% with this volatility. So I need to have a resistance. So we all know this is the resistance. Let me show you. Even if I take this as a resistance, so this is almost coming to 6%, but I need to get a short resistance. 6% is huge, right? So what I'll do, maybe this is my price action, because there is resistance 1, there is resistance 2, so maybe I'm expecting this might form a triangle pattern. I might be wrong, but this is my view. What did I say? Predicting the market is wrong, but having the view is right. So now if I check this, okay, so we have almost 4% down and almost 4% up. So this looks perfect. Okay, this looks perfect. So based on this, now we have to decide like what all strategies we can do. So price is between your resistance and support, so you can go for iron fly. Okay, now price is between your resistance and support. Rather than me telling theory, I'll take you to Sensible. First, let's see how to deploy the iron fly. Okay, I'll just quickly show you. If someone wants to go for the iron fly, okay, so we see, right, we have a 3% resistance and 3% support. Okay, so what I'll do, so your market stands at 39,300, this one, or I'll go for, see, either way, right, even we can go for this, right, and then how much of premium we are getting. So VIX is I, okay, this is my bad, this is 27th, I'll go to 28th. Okay, the price market stands at this thing, that's it, right? We got 420, so we go for 800. 1 2 3 4 5 6 7 8, typical, right? Typical iron fly. I'm not go for this thing. Okay, typical iron fly, because watch my previous video what I've made, right? 1 2 3 4 5 6 7 8, that's it. So this is your typical iron fly. Okay, so you have a safety of 1.2%, 1.6%. If you want to increase the safety, what you have to do, you have to just play around with your with your buy legs. Let me see if this increase. Okay, see, end of the day we are not targeting 21%, so you have a good resistance of 3%, right? So maybe what if I decrease, I mean to say, see, slowly you're able to increase the range. Okay, 200 minus, okay, 200 plus. Yes, your loss will increase, but at the same time your loss will increase, but at the same time you are getting more safety. So this all depends on the view of the market, because you are not targeting for 23%, right? So you have to increase the range. Okay, let me get it back to this thing. So it all depends on your thought process. Okay, give me 1 second. Okay, maybe this could be a typical iron fly. Now if someone is like bearish about the market, or market can go up, right, you can just play around with you. This is a broken wing fly, absolutely right. So if you are like bullish about the market, like sideways to mild bullish, you can go for this. Okay, if your view is sideways to mild bearish, you can go for, because you have almost like 1.47, so your maximum profit is here. So if you are not aware of the view of the market, you can just go with the iron fly. So we have seen the iron fly. So let me show you how to go for a broken wing fly. Okay, how to go for the, sorry, not broken wing fly, butterfly. Let me take you back to this thing. So now let's say you want to you are bullish about the market. From here, if your view is like market will go up, so how to deploy the directional butterfly. Okay, if you are bullish about the market, what you will do? Okay, maybe you will go 300 strikes here. Okay, or 400, you will buy this. Half of 270 would be like, let's check for 500 strike, 1 2 3 4 5. You will sell this 2 quantities, and then just to maintain the 500 spread, 1 2 3 4 5. So this is your typical what? This is your typical butterfly with bullish view. Got it? This is your typical butterfly with bullish view. What I mean to say, if you are bullish about the market, alright, this is your typical. And let's say if you are bullish about the market, if you do not want to have the loss on the call sets, what you can do, you can just cut down your break even by 100 points. That's it. See, the moment, see, this was my original 40,700. If I reduce the spread, so now this is your bullish butterfly with zero loss on the call side. If your view is mild sideways to like super bullish, you can go for this thing. Alright, so now let me show you how to deploy a put butterfly in case if your view is, let me show you, if your view is bearish, right, let think market can go down. So how to deploy that? Simple, friends. So this I'm showing you one video with almost all the potential trades. Okay, if your view is bearish, so we have to go for put butterfly. So 1 2 3, let me say I'll buy this, right, 1 2 3 4 5, I'll sell. See, there is no straight formula, but this is what I do. I basically deploy a butterfly with 500 spread difference, 1 2 3 4 5. Simple, friends. This is your put butterfly, bearish butterfly, sideways to bearish butterfly. You will have your loss of 1800 in case if the market goes up, or else if the market comes down, you have the potential of 21% profit. But just in case if your view is like sideways to, or maybe not mild, maybe bearish view, what you have to do, you have to reduce the strike. That's it. The moment you do this, so now the loss is only 65. Got it? Even this is one of the put butterfly. So we have seen iron fly, and also what is that, your butterfly, somewhere butterfly. So we have many. Okay, let me show you each and everything. How, see, this is how you need to have the view of the market so that you deploy. I'll delete this thing. Let's go for debit spread, right, my favorite. So now what you have to do, so let's say if your view is bullish, right, we go for debit spread. We go for call debit spread if your view is bullish. We go for put debit spread if your view is bullish. Let's see two things. Okay, let me show you my debit spread. Now this is where your market stands. So what I do, usually I go for 220 230 rupees, but today is Monday, so my meaning that today is Saturday. Ideally we deploy the trades on Thursday end of the day, but we are just doing this demonstration on almost like Monday, right, because by the time the market opens, because this is weekend, by the time the market opens, that would be Monday. So let me go for 228 buy. Simple. I'll buy this, and what is the half of this one? So I will go for 500 strike, 1 2 3 4 5. I'll sell this. So this is my typical debit spread which has a basically 1:3, right, 1:3 risk to reward. So if you want to reduce this risk to reward, you can just play around with your what, with your strikes. Already I've made the debit spread video. I think you guys have 24 videos, so just go and enjoy those videos. And again, don't ask me how to get good risk to reward, how to change the risk to reward, right? You have to play around with this. And so this is your typical debit spread. So just in case if your view goes down, so we know all the adjustments, converting it to ratio spread, converting it to strangle, converting it to ladder, butterfly. I mean, there are like a lot of adjustments what I've given you in all my YouTube videos. Simple, right? This is your debit spread. So let's say if you're not okay if you're not okay to take this loss. So basically what you have to do, so because you are giving a debit of almost this one, right? Let me show you. So this calculation you need to know, friends. If not, see, end of the day you are giving 3000 divided by 25. So okay, so end of the day you are giving a debit of 132. So if you want to reduce your loss on day one, what you can do, 132 divided by, let's say, 2. So you want to reduce the 66. Go to option chain and look out for one call option which is trading at 62 rupees. Maybe what I'll do, so if you sell this, we all know this will become your ratio spread. So now your loss is only 1714. Earlier your loss was what, 3319. Now your loss is only 1000. But this has exposed your call side to unlimited risk, but you have a safety of almost 4%, right? Only for 4 days, Monday, Tuesday, Wednesday and Thursday, right? We'll come back to ratio spread later. Now if you want to go for the put debit spread, simple, friends. Go to the ATM, put debit spread, watch out for same 230, 245, buy this 500, 1, 2, 3, 4, 5. So what I basically do, 235, half of 235 would be simple, right? 118. So either you will get your half of the premium of the fifth strike, or maybe just go for the fifth. This is your typical put debit spread. The same thing, 3001 is to, you are getting almost 1 is to 3.2, because whenever you go for the put, you get good risk to reward because of the VIX, you know, right? Because VIX is high, so you will get good. And even, you know, right, debit spread will give you, put debit spread basically will give you huge profit, absolute profit, because if the market falls, the VIX will increase. The rising VIX will increase the premium of buy like anything. Again, we are discussing about the strategy, but today I wanted to tell you basically every Thursday what all strategies you have to how to deploy all the strategies. So within one video I'm going to tell you 10 to 12. So based on that, next time when you're about to deploy any trade, you need to have all this in mind. So based on your risk appetite, based on your trading style, based on your capital, based on the market view, see anything, it can be X factor, you have to be aware of all these strategies. So what all things we have seen, right? Now let's go for the ratio spread. If you're not confident saying that market can go up, so now I'll tell you my 0 or 0 strategy, right? The call ratio spread, right? What I'll do, same thing, already I've shown you, right? I'll go for buy, I'll go for 501, sorry, 1, 2, 3, 4, 5, sell, and then what did I say? This is my debit spread. So if I want to make it call ratio spread, what will I do? I'll just convert this loss to 0. Let me show you, right? If I go for like this thing 33, still I have a loss, but this is the way I go for. See, whenever I go for ratio spread, call ratio spread, I intentionally have a loss of 1000 or 1500. This is huge, but let me, right, take it. Yeah, this is okay for me, because if I'm giving 2000 of loss, so I'm getting more safety. See, I'm getting almost 4.59% safety, in the sense, yes, my break even is almost like 1.49%. From year till year I'll be getting minimum profit. This surface I'll get maximum profit. From year till year I'll get, but the threat of call ratio spread is the huge gap up. So that's the reason I give more loss intentionally, because I know how to decrease this loss. How to decrease this loss, I've made all the videos on my ratio spread. The only one thing is like you have to shift this second call till your first call. So 40,600, 40,500, you can come till 40,300 by just, meaning you have to exit this, go to 40,500 the moment market comes down. You have to exit this, you have to go to 40,400 the moment market comes down. Again exit that, go to 40. So you'll have typical 1:3. By the time you do 2 roll down or 3 roll down, this entire side will become 0. You got my point? So this is not the only one adjustments. We have discussed many adjustments for the call ratio spread, and even I'll tell you one unique variant. Majority of the people doesn't know how to deploy the call. If you want to have the safety at the same time, if you don't want to give the loss, so what is the loss here? 2,300. See, this all are right. You'll not get in the paid videos also, friend. I'll tell you, right? Again, people will say, I'm bullish about the market, then why the hell am I giving this loss, right? For them, I'll give you one shortcut. What is the loss here? 2,300. Okay, 2,300 divided by 25 is the bank nifty lot size. So 92 rupees. So what if I cover 90 rupees from the put side, not from the call side, from the put side? Let me go to add edit. Let me go wherever I find a 90 rupees this thing. So do not have 90 rupees. Let's say this thing, 82. right? For time being, just take it. That's it, friend. Your loss is almost 283. If you make this 90 rupees, let's say you are getting at 90 rupees, let me show whether it work. Yes, that's it. So you made your loss 0 and you got the same. See, if I delete, if I remove this thing, your break even outer break even was 4.59%. Your loss will start here. The moment you add this, okay, your break even has increased. And let me check your this thing. See, this was 1.49%, right? For your profit to start 1.49%, if I'm adding this, only market has to make a move of 1.26%, and you have the safety of almost 3%. If someone says no, I'm very what do we say, market can go down, I'll get to this exposed loss, so don't go for this thing. So I'm just giving you all the options. But still, if someone says my view is so, that's what, right? I get the comment now, what if market goes down, right? What if market goes down? So I'm just giving you this option, right? What if market goes up? So why should I? So I'm giving you this option. Okay, I'll tell you one more thing also. What if market only goes up? I'm sure that market will not go down, right? So then what you can do is, like, you have to just go for 2 lots. That's it, right? Oh, let me show you. 1:1:2. That's it. See, your loss is almost 769. If you want, you can just go for 1:1:2. Okay, 1:1:2 with how much of this thing? With 200. So this is 1 by 1 cell and 2 cell. So there are like multiple ways, friends. There are multiple. I've shown you like 3 to 4 variations because I've discussed everything in my YouTube. So there is no point in repeating. So even this is right now, minimum you will get 2,141 on a capital of 2,63,000. Minimum you will get 1% of profit. This is one of my signature strategy. Honestly, I'm telling. See, either way you are getting. See, even market expires here at 2%, 2.6%, you will get 1% because your capital deployed is 2,63,000. But still you have the potential to get 5% just in case if the market traps within this green area. But minimum you will get 2%. Alright, but never dare to go for put debits, put ratio spread. So market stands here. Let's say I'll go for this thing. Okay, buy 1, 2, 3, 4, 5 sell, and then let's say I'm going for this sell. Right, I would never recommend you to go for the put ratio spread, because when market falls, market can fall huge, but still you are getting a very good range, right? 5% is huge, but still I will not recommend you to go for the put ratio spread. Rather go for just put debit spread, because we know, right, there would be a circuit. Lower circuit is on paper, but upper circuit there is not paper. Market can fall like 3%, 4%, 5%, but market cannot gap up by 2%. Hardly, rarely within last. That's what, right? You try to get the data. You check the data. How many times the market has opened 2%, 3%. The real threat of your call ratio spread is like maybe 2%, 3% gap up. But you check, right? You try to do the analysis or sort of R&D and use check, right? We have discussed about this thing also. Let me go. So what all we discussed, right? Within a single video, I'm telling you these many things, friends, right? We have checked the we have seen debit spread, ratio spread, we have seen butterfly, we have seen iron fly. Right now, let me show you the famous strangle and straddle. People fear of going for strangle and straddle. Okay, so what, again, let me take you to the this thing. So what is the safety you have? What is the safety you have? You have almost safety of almost like 5%, 4.5%, and see 4. See why I'm telling you is, like, let me show you. And this, see why the market has stopped here, why the market has closed here. Basically there should be some, see, if I put a line here, right? See, this is a sort of resistance. See, okay, see, these are not straight lines. That's what I keep telling, right? If price action is all about straight line, then everyone would have been millionaire. Price action is all about, let me show you, right? Price action is all about box, I meant to say, right? It's a sort of this one. This is a price action, right? Why did price close here? There is a strong resistance. Why strong resistance? Check the past. There was a resistance 1. The same thing acted as a support. The same thing acted as a resistance 1, resistance 2. See, resistance 3. Right? Resistance 3. The same thing acted as a support. Resistance. Try to understand, friend. This is what price action. Though these lines look junk line for you, but for me these are saviors. That's the reason I'm making consistent profit. That's the reason I'm making all these videos. That's the reason I'm able to deploy this many trades. I have the option of deploying these many strategies, be it directional or be it non-directional. All right, now let me show you this Strangle. Right, just go to this thing, right, go to option. This is a market. Don't go aggressive Strangle, don't go for this thing, right? Majority of the people will go for this Strangle, right? Market stands here, they'll just have like 500 600 points. Let me say this one 136, and let's say 136, right? This will give you panic, though you have 5% of safety, but still this will give you panic. Are you expecting 4.7% in a week? No, right? When your expectation is 1% or 2%, why are you giving that chance? So rather, what I would say, okay, let me show you, right? Check this premium. Let go for 25 rupees, 30 rupees based on the VIX, right? See, I'll take you this, right? I'll match it this, right? 65, 64. This stands very good, 2%. I have a safety of almost, how much is it? 3.65% on the downside, and almost like 3.37% on the upside. Still I'm not okay, because my expectation is like 1% or 1.5%. Let me go down and let me go up. Okay, this stands perfect. So I have the safety of almost like 3.83%. I have the safety of almost like 3.55%. What usually people will do is like they'll just go here, they'll go for Strangle, that's it, they'll go for the ready-made Strangle. They'll go for ready-made Strangle. See, with a see, 1 second, am I doing something wrong? Why this is showing 2.3? Yeah, obviously, right? So because I want more safety, so to get the more safety, what I'll do, I'll just go for 30 to 40 rupees premium or less premium. Let's say 50 to 38 rupees, and let me take you to 30 rupees, and this is my ideal what do we say, Strangle. Yes, 1.3%. If you want more thing, you can just go, you can just increase. But now see, the reason I'm telling you, you are not getting 1.5% now. So reason, see, there is, I told you, right friends, I told you I'll be making a video on my hybrid trader Strangle style. This is more or less, because I'll not target for 1.5%. I'll make a separate video. I'll rather target for just 1%. I'll just tell you, right? Not even 1%. I'll target for 0.5%. Let me show you. I mean, that's it. This is my Strangle. So I have 5% downside and almost 5% upside. This is my typical Strangle, and then I'll do my adjustments. My goal is to, simple friends, my goal is to increase the profit. Anyways, I want, see, I'll tell you, anyways, my expectation is, let me show you with Epic Pen. Anyways, my expectation is to get 1.5% or 2%. I'll start with 0.5%, and slowly when the market stands here, next day when the market stands here, I'll just do the roll up. I'll do one roll down. The moment I do this, this will become 1%. And let's say the market stands somewhere here, somewhere here, somewhere here. I'll try to increase the range. I'll try to roll up, roll down. See, I'll make a video that you guys are, see, anyways, end of the day, I'll be able to get 1 to 2% with ease. 1 to 2%, but the only differentiator of hybrid trader Strangle is I start with 0.5%. Can I show you one example? Let me show you what I'll do. Simple friends, see, now this is my original trade. Let's say after one day I'll just roll up. Roll up is like I'll exit this, I'll roll up by 200 points. Keep a check on this percentage. Okay, let me get it back. This was my original fly. What I'm doing, let's say the market stands here, I'll just roll up by 200 points. Check this, handles, and I'll roll down by 200 points. Still I have 4.74, 4.24%, right? My profit has increased. As and when I go close to expiry, do I need 4.74% on Wednesday end of the day? No, I'm okay with the 3% also, right? I'm okay with 3%, I'm okay with 2.5%, 3%, 2.5%. But what should I do with this thing? Slowly roll up, roll up. The moment you roll up, this profit will come to 2%. Can I show you? Okay, so again I'll roll up by, let's say, 200 points. I'll roll down by 200 points. Check this, you came almost close to 1.5%, friends. Check your safety. You still have safety of what, 4%, and you have to balance it. So needless to say, right now people will complain saying that you will be getting a premium because you're trying to do the simulation. Yes, there will be like plus or minus, but you have to manage that. I'm just showing you one template. Okay, this is your typical Strangle with view of the market. With the view of the market, I'm not randomly deploying this Strangle. I know there is a resistance at 4%. I know there is a support at 4% because it is at a critical resistance now. So what will happen with the market now? The moment I've plotted this, right, it can go up let me show you, it can go up or it can, it can come, my bad, what I've done, right? This can go up, right, and take the resistance and come down, or else it will come down, it will go, it will take the support and it will come up. So this is the way you need to have the view of the market. Based on this you need to deploy all your trades. Let me come back. So what all we discussed, right? We have discussed about, so let me show you the iron fly, right away. So basically what is, not iron fly, what is calendar? See, calendar is simple, friends. What is calendar? Calendar is nothing but on top of your strangle, if you are buying the edges of next week, that is your calendar. Simple, friends, don't try to complicate. I've already made 3 to 4, 5, 6 to 7 videos on the calendar. Let me show you, right? This is your strangle now, so let me take it to 40 rupees. Okay, not 40, let me take it to, just I'm giving you one example. Let's say this is your, this is your strangle. Okay, you have a safety of 4%, 3%. Just to convert this to calendar, what you have to do, see, there are basically multiple calendar. There is something called diagonal calendar, there is something called classic calendar, but we are going for the diagonal calendar. What is diagonal calendar? We have to go for the next week. So let me, so what how much of premium you collected? 50 and 50. Okay, let me show you. I'll go to next week, 29th, so 27th October. Let me try to collect the same 50 rupees so that you guys will enjoy, not enjoy, understand. Let me try to collect. We do not have 50, so let me buy this 55. Let me buy one more which is close to 55. Okay, that's it. This is your calendar, not a rocket science. This is your calendar, and you know, right, calendar, if the VIX increase, check this profit. You have a profit. See, again, this video will become lengthy. You have a profit of 3,000. So the moment the VIX increase, check your payoff and everything, how this will that will act, because this requires the increasing VIX. See, if I'm increasing the VIX by 10%, which is usually happens, right, check your profit. From 3,000 your profit has increased to almost 8,000. You got more range. As and when the VIX increase, your payoff will change, your profit will increase, your probability of profit will increase, your range will increase, your loss will be standing at the same position. See, let me show you. If I put -10 here, if the VIX decrease, your this thing will go, and see, your loss will remain common. I mean to say static, but your profit has reduced basically. Right, you need to have the view of the market, and you need to know whether the VIX is going to increase or VIX is going to decrease. How do you get whether the VIX will increase or decrease? Just by knowing the market view. I'll get it to 0. See, this is your original, what do we say, your calendar is a strangle with next week buy edges. That's it, a strangle on top of strangle. If you're buying the next week edges, that is your calendar. And now, how to see, still you're getting 4.1%. so basically what you have to do is, like, let's say this is a very good, this is one of my favorite, right? See, you have a safety of almost 4.2% and 3 point check. Even if market opens tomorrow gap down by, let's say, right, see, check the 3% gap down is giving you only a loss of 1,282. Why, my dear friends? Why it is showing only 1,282 with a gap down of 3%? Let me delete this 2 buys. Let me remove this 2 buys, and now, right, almost 3%. See, it is giving you a profit of 2,029, double of your strangle. Why? Because of this buying edges. Because when the market falls, the VIX will increase, the falling VIX, the VIX will increase, the rising VIX will increase the premium of your buy position. That's the reason you do not see more of loss. This is one of my favorite strategy. If I get more likes, I'll give this. This is just a sample. There are like 3 to 4 variations. Even I can tell you what same adjustments what we do in this triangle. Deploy your calendar like this. Yes, your profit is, how much is your profit in the middle? Only 733, 280. That's it, 280 on a capital of 72,000. But your maximum profit is here. 4.5% is at the edges. But it's your responsibility in terms of rolling up this combo, and rolling down this combo. What I meant to say, you have to slowly roll up, roll down. Same like the way, roll up, roll down. The moment you do this, so you will make your calendar spread something like this. So you have a good profit in the middle, and just in case if the market expires somewhere here, you will get double profit. Should I show you one example? Okay, so what I'll do, I'll just see now, check the profit. You have only 283. Okay, you have 283 and you have a profit of maximum of 300, right? I'll just roll up 200 points and also I'll roll up 200 points. Let's say I'll roll down 200 points, I'll roll down 200 points. Check the profit now. Your profit has increased from 200 to 1058. Still you have good safety. You should not be doing it very aggressively, and there is a technique basically. I'm just showing you template. Again, what if I roll up 200 points? You have to roll up 200 by edge, roll down my sold position, along with that roll down my buy position. That's it. What is your profit now? 1000, 2000 profit on a capital of 72,000, but still you have 5% profit in case if the market expires here or if the market expires here. This is all about doing the adjustments, but still check your safety is still 3.28%, 2.82%. It all depends on the view of the market. And where does your VIX stand? So we have seen the calendars also. Within single video, I've shown you Strangle, I've shown you ratio spread, we have seen butterfly, we have seen debit spreads, both variations. Even in butterfly we have seen put and call, right? Directional butterflies, we have seen calendar, we have seen iron fly. So what is left with straddle and what is that? Iron condor, straddle and iron condor, right? So let me take you to iron condor. See, iron condor is simple, friends. Just go here, see, you go to ready-made trades, click on this iron condor. This is your iron condor, but I do not go with this iron condor what the sensible is showing, because check the risk to reward. It has 10% profits and 14%. What I'll do, why should I give those? See, I'll just roll down, sorry, not roll down, basically 1 second, I'll roll up. Sorry, my bad. Let me get it back. So I get confused with so many. So I don't want to give this much of loss. Okay, I don't want to give this much of. So what I'll do, I'll roll up my what do we say, put. Again I'll roll down my call by 200 points. So let's see. So now 1:1. This has become 1:1. Let me say I'll roll up by 200 points, I'll roll down by 200 points. At least this stands good. Yes, I want 3% per week and with a cost of 1.7. This is almost 1:2. This looks ideally good. This looks ideally good rather than, right, the initial one, rather than initial wherein like I have like 12% of loss and 10% of profit only. This looks at least 1:2, and you know that I already made the iron condor videos in my playlist. Go and watch those videos. This looks good. And what is basically jade lizard? Jade lizard is nothing but, see, what is iron condor? Basically iron condor is nothing but your strangle. This is your strangle with the edges. That's it. What is your iron fly? Your straddle with edges. What is your what is iron condor? This is your sort of strangle, friend. This is sort of strangle, and then on top of strangle you are deploying edges. That becomes your iron condor. If I remove this edge, this is my jade lizard. What is jade lizard? Basically a strangle. On top of that you have a wing of your put side. Okay, and I'll not go this much of aggressive. Let me go like, see, 1 second, right? This is my jade lizard. Simple, right? Or else I'll go up, right? So sideways to mild bearish. If my view is sideways to mild bullish, I'll go for this thing, right? If I'm super bullish, I'll go for this thing, or else my view is like majority of that is this will be like sideways and then mild bullish. So what I'll do, I'll just decrease. 1 second. That's it, right? I get huge profit, 4% profit if the market stays sideways, and even if it goes mild bullish, my profit is still been like 2% profit or 1.5%, 2% profit. This is nothing but your jade lizard. If you add this is nothing but your iron condor. So what all we discussed now? We have covered iron condor, we have covered what is that, your jade lizard. So only pending is what? Only pending is calendar. We have covered ratio spread, strangles, straddle. Yeah, let's check straddle, and then we'll go to option buying, and then we'll go to back ratio spread, right? Isn't it interesting? If you like the video, right, stop the video, pause the video and give it a like, friend, because I'm putting so much of effort. If you guys don't know, now let me show you what, let me show you straddle. See, straddle also is one. See, straddle can be this thing, right, at the money. Okay, this is your typical straddle. Let me zoom out. This is your typical straddle. Straddle can be this thing also, friend. Who is asking you to go for straddle, right? Straddle can be this thing also. You will have a flat surface here. Or straddle can be this thing also, right? One single near ATM or at the money or in the money. This can also be a strangle. So straddle is doesn't make see, straddle is not a defined thing, right, wherein you have to just go for at the money only. So straddle can be this thing also, right, two same strikes, not at the money. Basically this is a sort of in the money for call, and this is a slight at near the money, out of the money for put. Straddle can be this thing also, right? See, that's what I mean. Do not stick to the standards. Even this is your straddle, even this is your straddle, right? This is a sort of flavor of strangle and straddle. See, if you go for 300 strike, let me save you, right? Let me show you, right? Isn't it a straddle? Okay, let me show you, right? Isn't it a straddle? This is not exactly straddle, but the mixture of strangle and straddle. Your strangle will have flat surface, this has a short surface. So even this is one of your straddle. Even you can go for this thing. What we are doing, like we are just going like what, 300 points OTM, right? Maybe like 3 strikes OTM and 3 strikes OTM. That's it, right? There are like multiple combinations. If you want to add one broken wing fly, you can just go ahead and add one broken wing fly. If you want more safety on the what is that? See, this is again, we are back to jade lizard. Don't go based on the naming convention, dear friends. Don't go naming on the naming convention. You have to know what is straddle, what is strangle, right? Combination of what is that, strangle on top of strangle. If you're deploying, if you're going for the edges, only one edges, this will become your what? This will become your jade lizard. If you're buying one more buy, this will become typical your what, right? A sort of iron condor. See, there are like things. If you go for, you got my point, right? So needless to say, because the video will become lengthy, and we have seen this straddle, and now I'll show you what back ratio spread. This is very interesting for me, because I'm planning to do one dedicated video. See, back ratio spread, I think this is going to be like tough for you. See, this requires very good see, go to others. There is something called, let's say bearish. Okay, let's say bearish. There is something called, one second, why this is not showing the below one. Okay, let me refresh the page. Yeah, see, go to 20th expiry. Let's say if you deploy a call back ratio spread, many of the folks were asking, but this is very dangerous also. In case if you do not know how to manage this back ratio spread, this will go on toss. Basically, see, what is back ratio spread? This is basically a 2 buy and 1 sell. This is opposite of your ratio spread. Ratio spread is a credit spread, back ratio spread is a debit. So basically you see, if you have 2 sells and 1 buy, that will become your call ratio spread, right? 1:2. So this is the back ratio spread. The view of the back ratio spread is, right, this is just to go for this. See, there are like multiple ways. I use back ratio spread to manage my positional trade. I use back ratio spread to get profit from the gap up or gap down, but selecting the strike, selecting the expiry day, these are all very critical. I mean, I'll not discuss many things, because if I tell you, right, you guys will just go ahead and just deploy it. That's it. Don't even know what will happen when market goes, right? What will happen to this blue line, right? When the market opens on Monday, what exactly will happen with the blue line, right? How this blue line will behave, what will be your MTM loss. I mean, for that I'll make a dedicated video, and this is one of my signature strategy, friend. This is one of my signature strategy. This helps me a lot. I mean, I would say from last 1.5 months, 2 months, I think you guys are looking at my Telegram channel, right? So wherein I'm just playing with this back ratio spread. So this back ratio spread I can play independently, and the back ratio spread I'm deploying to balance my positional trades, right? And also I can play it independently. This has become a peace of mind for me, and you'll not find anywhere this kind of videos, right? You might find what is back ratio spread, but how to deploy the back ratio spread to mitigate your loss in terms of contra, right? You have to wait for those videos. All right, and what did we discuss? Yeah, option buying. See, friends, this is very, very important. You might be surprised why this option buying. I've already made a video. Whenever if someone, even a positional trader, can also start with a option buying. What I meant to say is, let's say I want to go for debit spread. Let's say I want to go for a debit spread. I'm a positional trader. I'll take the call example. What did I say? I'll buy this. Okay, I'll buy this. Literally, I'll buy this. Or else what I'll do, let me say, if I'm an option buyer, right, I'll not go like 300. Let me say if the market stands here, Monday when the market stands, I'll buy this one. Simple. I'll buy, naked buy. I'll put a 50 rupees stop loss. I'll put a 50 rupees stop. Either this has to become 360, either this has to become 360, or this has to become 260. That's it. If this becomes 260, I'll exit my trade with the loss. If this becomes 360, so I'm capturing 50 rupees premium. Point number 1. The moment I capture this thing 50 rupees premium, so then what I'll do, I'll go, so what is the strike? 39,600, right? I'll buy 500 strikes. 1 2 3 4 5. That's it. Sorry, I'll sell this to convert it back to my debit spread. But do you see this loss? No, because this has become 360 by that time. So see, I'm not sure, I'm not, because this, see, if this has become 360, so this has to become maybe let me check with 200. Will this work? No. 100. I'm not sure. See, I'm not, see, so 1 second, I took 40,000, right? So this has to become, sorry, let me see, no, even 50 would not work. What is half of that? 150, 180. Okay, so I'm not good at the calculation to, okay, see, I'm not good at the calculation, but you got my point, right? So maybe, yeah, maybe this would work. So this, if let's say this is at 300, right? I'm just giving you an example. So by that time what happens is, like, your original debit spread was actually giving you a loss of 3,000. So what did we do? Because if you look at this calculation, simple, right? 3,000. Okay, so maybe 3,000, right? So 3,000 divided by 25, let's say. So 120 divided by 2. So if I'm capturing 60 points, let's take an example of, if I'm capturing 60 points from my naked buy, so the moment I sell, my loss will become 1,500, because I've already captured my 60 rupees what do we say, intrinsic value. You got my point? So start with debit spread, start with debit spread with a strict stop loss. Okay, if this has given you 50 rupees profit, and then convert this to what? Convert this to debit spread. If you want, you can even convert this to butterfly. Let me show you one more thing, right? How does a butterfly look like? You have to sell 2, and then what is the spread difference? 500. So I have to buy 40,600. Let me show you. 40,600. I'm not sure whether the premium will match or not, but something, this will become something like this. Though this will not show you huge profit, but we have, because we have done, right? So maybe this would be trading at, let's say, 250, right? Sort of, yeah, sort of this thing, right? Or 200. See, the moment you convert, so now you can hold your butterfly, because if you are going for naked buy, you will be exiting with only this profit. What is that profit? 60 rupees into 25. That's it. You will exit with 1,500. But the moment you converted it to a positional trade, you have the potential of capturing 27%. That is like 13,500 with peace of mind. Got it? I've already made a detailed video. Go back and watch that video. If you do not find that video, let me know. I will just make it public. Alright, so we have discussed about these many trades in only one video. Guys, please, even if you did not like the video, for the effort, give it a thumbs up. Unless and until you guys share my videos with your friend, unless and until I don't see more subscribers, there is no point in making the videos. You got my point, right? Tell me one YouTuber who will be showing you these many strategies with the single video. Tell me. If someone wants to comment, right, comment the video and give me the Telegram channel also. I'll follow his channel. If someone is doing everything for free, or also paid content, anyways we will be not getting to know, because we have to pay for that. But tell me one YouTuber on the entire YouTube arena wherein is telling all this type of, not pertaining to this video, the other adjustments what I've shown you. Okay, so we have covered basically everything, right? Back ratio spread, straddle, strangle, jade lizard, ratio spread, debit spread, calendar, iron fly, butterfly, iron condor, and option buying with selling. And what else you need, friends? So every day, see, every day what you have, not every day, every Wednesday what you have to do, every Thursday you have to know, boss, should I go for debit spread, should I go for ratio spread, should I go for iron fly, should I go for jade lizard, strangle, calendar. You need to know this you will be able to get only when you know the price action, only when you know the view of the market. How does the view of the market comes to you? You have to be like very good at price action. You deploy whatever price action you want to do. This is my price action, this is my price action, this is helping me in terms of deciding which trade I have to go. Got it? So don't take the price action light. You have almost 10 to 15 videos on the price action, right? Don't use the indicator, friends. Don't use indicators. Indicators are lagging indicators. If you are dependent on indicators, you will not become a successful trader. Okay, so how to join my Telegram is a big question, right? Go here, you have to search for Telegram, right? You have almost like 613 subscribers, or else go back to my YouTube channel. Okay, you go back on the home page, you have this Telegram channel and also Twitter channel. If you want, you can join the Twitter also. So I'm there on the Twitter. Okay, so almost I have like 3115. Thanks for all those who are following me, because I've very recently, because I'm not active in Twitter, but nowadays I'm becoming very active in Twitter, because this is a good platform for me to share all the information on a quick. So friends, whoever is part of my Telegram channel and right, please follow me in Twitter, right? Create an account and follow me in Twitter, because I'll be sharing you all the trade logics. Check here, all the trade logics I'll be sharing it here. All right, so okay, we'll just conclude the video. So if you like the video, give it a like, share with your friends, subscribe my channel, and also make my channel grow. All right, thank you.